By the first quarter of 2026, the traditional single-job career path has fractured. 46% of the UK population now holds some form of secondary income, building a gig economy worth £260 billion. But for the majority of participants, the financial baseline is modest. The average British side hustle currently brings in about £872 a month. This national average masks a significant geographic divide. In major financial hubs like London, 3 in 5 people maintain a secondary income, pulling regional averages much higher than the rest of the country. This creates a disconnect for anyone entering the market. While social media posts promise £100 an hour for minimal effort, actual market conditions rarely reflect that level of ease. Reaching the highest-paying tiers requires moving past casual microtasking and treating your extra hours like a structured professional microbusiness. Navigating the modern gig market requires understanding the trade-off between liquidity, immediate cash, and leverage, high hourly rates. On this scale, low-barrier jobs like food delivery sit in the bottom left. Algorithmic delivery apps offer high liquidity because you can start working today, but the earning potential remains strictly capped. Specialized roles like AI prompt engineers and skilled handymen plot into the top right. These roles require specific technical expertise or physical certifications before you can book your first job. Because anyone with a smartphone can access low-barrier work, the massive supply of willing labor allows the market to keep those wages suppressed. Maximizing your hourly rate means choosing roles with high entry friction, tasks that the average person cannot perform without significant preparation. The first high-paying category involves specialized digital skills and what economists call the AI wage premium. This matrix shows tech talent earning potential. AI prompt engineers average $54 an hour, machine learning engineers £53. The input is steep, continuous upskilling and months building a reputation. Hidden costs include 20% platform fees and unpaid hours bidding on contracts. Digital gigs offer the ability to scale your earnings globally, but they demand a significant upfront investment of unbillable time to maintain that flow of work. The second category focuses on physical trades and local services, naturally resistant to automation. These roles, ranging from property maintenance to specialized tutoring, reward physical presence and human trust. Tutors average between £20 and £40 an hour, while specialized handymen can reach monthly earnings of £5,000 managing their own leads. Operating in this tier requires purchasing public liability and professional indemnity insurance, typically costing between £10 and £50 a month, and managing physical travel time between clients. Your earnings are also tied to local market rates. A worker in London averages over £1,400 a month, while the same physical labor in Scotland averages £930. Human-centric roles provide long-term protection against AI disruption, though they strictly limit your ability to scale beyond your local driving radius. The final high-paying category utilizes physical assets you already own, such as spare rooms or driveways. In the UK residential market, this usually involves leasing out a furnished room or renting out a private parking space. This provides a high ratio of revenue to active labor. Schemes like the rent-a-room allowance even allow you to earn up to £7,500 a year tax-free. The trade-offs include a loss of personal privacy and the requirement of significant existing capital. You also miss out on developing new professional skills that could increase your future earning power. Asset monetization functions as a capital deployment strategy rather than a traditional job, utilizing your existing wealth to generate revenue. Every high-tier gig worker in the UK now faces a universal administrative hurdle: the April 2026 Making Tax Digital rule changes. Under these new regulations, high earners must move away from annual filing toward a much more rigorous system of documentation. You are now required to maintain digital records and make quarterly submissions to HMRC. This often necessitates the purchase of specialized accounting software to avoid automatic fines. This compliance burden reduces your effective hourly rate, but introducing hours of mandatory, unpaid administrative labor into your week. Finding your ideal path requires a clear assessment of your available assets and specific life constraints. We can simplify this choice with a decision tree, starting at your primary asset. If you possess coding or data skills, you are a tech optimizer. Your best move is to lean into the AI wage premium, using platform fees as a necessary marketing cost to access high-tier global clients. If you have a physical trade or teaching certification, you are a human-centric professional. Invest in local service platforms and take full advantage of the £1,000 trading allowance for your initial earnings. If your only asset is spare time, be cautious. Algorithmic delivery apps offer quick liquidity, but they are often a trap for anyone seeking a high long-term income. On these platforms, your payout is determined by the sheer volume of other workers, keeping your hourly rate tethered to the lowest common denominator. Achieving financial leverage in 2026 requires moving beyond high-effort task apps, focusing on specific skills that keep your hourly rate protected from market saturation.